Hi everyone, hope you're doing well. Today we're going to take a look at AMD, Nvidia and ASML as they are stocks that are having big drops today. And what I'll do today is I'm going to rank them in the order I prefer to own them, or which order I would buy them in, and give a little bit of commentary around the drops and a couple of extra things as well. So hope you enjoyed the video. Apologies, it is a little bit late. It's just been one of those days. It's been one of those days where a 4-week-old baby has taken over my day and just been very busy with her today, which I'm sure you guys can understand. And hopefully, even if you don't watch it right now when I end up uploading this video, which will probably end up being like 1 a.m. Hopefully you can watch it the next day if you're from the UK. Overall, the market's a bit of an ugly day today, having a bit of a, in my opinion, a bit of a healthy pullback. We've been on a bit of a run, and there's definitely concerns still around the market. Maybe getting a little bit carried away still and thinking all that tariff news is kind of out the way, and maybe listen to some of the company earnings today, like ASML's earnings kind of went, actually, yeah, there's still going to be a bit of overhang here, and maybe the market was kind of adjusting to that. Looking at the Dow, down 1.6%, S&P down 2.14%, and Nasdaq down 2.8%. So Nasdaq, as typical on the bad days, going down more, and obviously on the positive days, normally goes up more. Before we do get on to semiconductor stocks, good news that came in with the UK inflation today. Wasn't enough to push the UK stocks to having a really good day though. UK inflation did come in slower than what is expected. The problem is with this UK inflation data is that it doesn't really matter. It doesn't really matter because what's going to happen is when we get to April, UK inflation is going to start jumping up, because what we have there is we're going to have the energy price cap going up. That's going to massively be putting inflation up in the next month's reading. Council tax going up. We have the likes of the NI costs starting to come in, and that's when companies will have to be a lot more price effective to kind of control these NI costs that are going to be coming in. And what that's going to lead to is the inflation data in the next month reading, in my opinion, will have a big jump. We'll probably start entering the 3% range in the next one. So maybe that's why the market wasn't getting excited today, because it knows that the next month data isn't going to be that kind. Obviously, the other thing is the US. Obviously, the US had a bit of an ugly day. And as we know, the UK quite often will follow whatever the US is doing. It saw the US was going to have a tough day, and it thought, yeah, we'll follow you guys, and we'll have a bit of a tough day as well. So obviously, you know, when we look at the markets, why was it down? More than likely, it was probably because we had kind of the big dogs pulling the market down today, the likes of Nvidia, AMD, more restrictions and tightening on the selling of AI chips to China, and also probably ASML's earnings today. Bit of all negative around the chip space. It just kind of pulled the whole market down, really. So what came out is that there's going to be tighter rules on AI chip selling to China. Nvidia is expecting to have a 5.5 billion hit, which is, it's pretty significant. Very quickly when you are getting hit by these amounts, it can really start adding up as well. That is also the same for AMD's, one of AMD's chip. I can't remember the exact one it is as well, but AMD also had one of theirs that was going to be restricted as well to China. So obviously, still not great relationship building going on at the moment between the US and China, and it just shows you, you sometimes forget that very quickly. It's very easy for some of these countries to go, yeah, you're not doing that. Imagine the days if there was ever the days where China went, yeah, you're not selling any more iPhones in China. Imagine how much Apple would get hit by that point of view if that was to happen. But I also think it's going to be hard to police this. It is, obviously Nvidia can't sell directly to China, but I'm sure there's still going to be ways that some of these chips end up going to China. Don't expect that to totally go. I think there'll be people trying to work their way around it. As we look at Nvidia, having a bit of a pullback, down 24% from the highs, and today we're down about 5% today. AMD, same again, down about 5% today. Let me refresh that. That was from an earlier screenshot. Actually down 7%. We ended up closing 7% down. First of all, Nvidia. What's my thoughts on Nvidia, and would Nvidia be a stock I would be interested in buying? Well, relatively, when you look at the forward PE, Nvidia is now at 24 times earnings, and that's not bad. You guys know me. One of my favorite metrics is the forward PE. What are their earnings going to be? That's investing. You're trying to invest, and you're trying to get what the future earnings potential is going to be. And if the stock price is not reflecting the future earnings, then in the next few years, as the company grows those earnings, the share price will reflect those earnings growth. And I look at Nvidia and I think, 24 times earnings, that actually doesn't look too bad from a forward P basis. The problem I have with Nvidia is that I like it as a company. I really do like Nvidia as a company. My issue is this. I mean, look at that revenue and profit. Insane. That is like rocket ship straight up in a straight line with Katy Perry at the top of it. Like, it's absolutely crazy. To go from 32 billion in revenue to 130 billion in just under about a year and a half time is insane. Insane growth. Now, the problem is that when you look at the future growth, like the growth is starting to slow down now. So they are projected in their financial year 2027 for Nvidia to do 22% revenue growth, which is still pretty good. You'd argue that's pretty good for a company that is trading at 24 times earnings. The problem is that at 22%, when you look at a percentage, okay, it's not too bad. But realistically, if you look at how fast that has to grow at, they basically have to go from 202 billion in profit to 249 billion, in revenue, to 249 billion in revenue. That's 50 billion nearly that they have to do in a year. Now, to put that into context, like how hard it is to grow 50 billion. Before this time period, they had got nowhere close to growing 50 billion a year. Like if you look at one of the best years from 2018 to 2019, the growth there was 3 billion. 3 billion that point of view. And now they have to do 50 billion. If you start looking from the point of view from 2023 to 2024, big boom up in revenue, as you can see there. But that surge there was 25 billion. So they've got to do nearly double that in that time period. And when things went absolutely nuts in this big AI demand, they've got to go from the point of view of like 60 billion up to 130 billion. So, that there is around about 70 billion-ish that they did there. And that was with the big surge of AI. So 20% doesn't sound a lot. But when you actually look at the amount of revenue that they've got to do, 50 billion of revenue, it's a big ask. It's a big ask to do. And that what makes me a little bit nervous is that it's very easy looking at that and going, yeah, they can do it. But can they? That's what I have to ask. That's what I ask myself in the video, is that, they're expecting, obviously they've done good growth, but to still see this growth continue and continue, it's a really big ask, in my opinion, a really big ask. And the other issue that I have as well is that, and people have forgot this with semiconductors, people always forget this when stocks go absolutely crazy, and then they remember it when they start falling down, is that Nvidia is a semiconductor. Like, semiconductors tend to go through cycles. They have those cycles where they're booming, and then all of a sudden they realize, actually, there's not as much demand, and then they have to bring the prices down. You bring your prices down, you bring your margins down, and that has to happen at some point. That has to happen. And all through Nvidia's history, there's been cycles. I remember, I don't know if any of you guys remember, but 2018 to about 2019, Nvidia went from a point of view where it got thrown under the bus. And in fact, if we were to go look at the share price on Nvidia, you'd be able to see probably the drop off. We have to go on max here. So like 2018 there, you look at that, Nvidia at one point during that time frame was down like 40-50% during that time frame. And people went, there's nobody's going to want semiconductors chips. Like, they're done for a little bit. Nvidia's finished. They've got too much stock. They're going to have to sell it off for cheap. There's not, the surge for semiconductors slowing down. And then we walk into 2020 and we have the CV situation, and then everybody's at home, and then everybody goes spend all the free money on either new vehicles or EV cars or new electronics for home, whether that be TVs, PlayStations, and then they see the surge back up again. And then what we started seeing again with Nvidia is that the stock started dropping again because everyone, the slowdown again because everybody were ordering all these electronic parts and now they don't want it. We're at the bottom of the cycle. And then what happened in 2022? AI came and AI surged up at that sort of levels. So what point of view is Nvidia going to get to the point of view where, and it will, I think the day will come, and obviously there's no signs at the moment, where people kind of go, actually we don't need as many AI parts. And then all of a sudden Nvidia goes, hold on, we've just kind of been stocking in 40 billion worth of parts of semiconductors here, thinking we're going to generate 40 billion in revenue. What we're going to do all this inventory, and then they have to start selling the inventory off cheaper. And then what you're going to have as well is that, what Nvidia have been able to achieve at the moment, because there's so much demand, is that the pricing power. They've been able to achieve like 55% profit margins. Now, obviously, there's some scale of efficiency there, but even during like the peaks of like the last cycles, so if we go to like the last CV cycle, for example, the peak in profit margin was 32%. If we look at the peak in the profit cycle, the cycle of semiconductors last time, it was around about 37%. But when we get to the bottom of the cycles, look at what margins they achieve. Around about 24% margins. Let's go back to the 23. 16% profit margins. There's still, I don't think many people. This is what makes me nervous about Nvidia, is that I think it's a great company, and I think over the long term it's going to perform very well. What makes me nervous right now is buying in at this moment, because everything's amazing. But actually, when you start looking at the numbers, and there will be a day when the cycle comes, and normally the cycle comes after a boom, when is that day going to happen? And that's what makes me nervous about getting in Nvidia. Now, obviously, I actually do own a stock in the space, which is AMD. Now, AMD has done the total opposite to Nvidia. You look at their share price, absolutely nothing. But when you look at AMD's financials, you can see that, because where Nvidia have been absolutely skyrocketing, AMD hasn't really, look at 2022, hasn't really seen much gain financially. And that's because AMD hasn't been as good as Nvidia. There's a reason why it's down. The products that AMD were producing were not as good as Nvidia, and Nvidia was really able to capture a lot of this AI demand, and AMD hasn't. They are at what you would say the bottom of the cycle. But I like AMD a lot more in this space, because when I look at someone like an AMD, they are at the bottom of the cycle. AMD is what I think will happen to Nvidia at some point. Nobody right now wants to own AMD. It's at the bottom of the cycle. But financially, they'll go to the top of the cycle. And AMD, we're starting to see them bring out new semiconductors that are going to be hopefully successful for them. Nobody really knows, because they keep them under wraps. That's sometimes the risk, is that you don't know how successful some of these new semiconductors they're working on are going to, how successful they're going to be. But as well as that, someone like AMD they have so much potential to take a market share from Nvidia. Nvidia at the moment is at the top, but when you're at the top, you've got more market share to lose. AMD all of a sudden coming with maybe like a cheaper product or an alternative product to take away the demand from Nvidia. Nvidia then has the harder numbers to beat, and something like an AMD, they've got someone that hasn't really benefited that much from this AI boom at the moment. If you look at what they have to do, for example, so on 2025 numbers, they've got to go from 25 billion up to 31 billion. There's only 6 billion compared to what Nvidia have to do, 50 billion. Look at AMD, they've got to go in 2026 numbers, 31 billion up to 38 billion. And look, they're growing exactly the same levels as Nvidia. I would personally fancy AMD to do better than Nvidia, because they've got so much easier comps, they've got so much more market share to take as well. And I think when you look at like AMD, for example, it's 24 times earnings. Like, this is also 20% cheaper still than Nvidia. So this is why, personally, for me, I look at someone like an AMD, and I'd rather pick AMD up in this space because it's cheaper. And for me, they're at the more bottom of the cycle. It's harder for things to go wrong at the moment for these guys, because they haven't really got much benefit from it. Nvidia, I just look at them and I think the cycle that they're on is, they must be getting close to the top. That's one of the reasons why I feel more comfortable getting AMD. And as well as that, I'm an individual stock picker, so I don't really want to have AMD in this portfolio and Nvidia in the portfolio. I want to pick the best one. That's the point of being the individual stock picker, is that I pick the best stock in the space and it performs. And I feel like AMD would be the one in the space. Now, the other thing that happened today is ASML. They came out with their report, their earnings. I think they were down about 5%. And overall, we can see here, like from their 52-week highs, they are down about 42%, which is quite a significant drop. And we haven't really seen that from ASML apart from the 2021 and 2022 pullback. And if we zoom out there, not really that much of a slowdown. You can see it down about 16%. So an absolute fantastic performer. So if you don't know what ASML do, there is a Dutch company, and they're a little bit different from the likes of Nvidia and AMD, who actually sell the semiconductors. They actually manufacture the systems that are used for providing microchips. So they are more of the technology equipment rather than the chip manufacturers. So also this is they kind of have a bit of a monopoly in this space, because they are the best in the business. They are the superior business in manufacturing this. There's competition, there's people trying to catch up to them. There's other companies like Samsung, I believe, and I think there's someone else. Is it Intel? Could be Intel. They're trying to bring it in-house and bring their own. But at the moment, the technology they have is still very much superior than the other companies in here. So they do have a big lead on all the other competitors. So that makes them a little bit more unique because they're kind of the only company in here at the moment that can do it, and all these other companies kind of need ASML. Now, looking at the growth at the moment, still looks pretty good. You know, you look at the 15% growth, 10% growth. You look at what they're currently trading at the moment. They're currently trading at a forward P of 24. Obviously, they brought their earnings out, and revenue was up 46% year over year. However, Q over Q, it was down 16%. Good gross margins. Net bookings, though, was down 44% quarter over quarter, but up 9% at the moment. And they said that tariff announcements have increased uncertainty. They do say AI continues to be the primary growth driver in the industry for them. Conversations with customers support the outlook that in long term everything will be okay. But they do say that despite weaker bookings this quarter, our long-term targets for 2025 remain intact. So this is the thing, is that they clearly are seeing some sort of tariff impacts. You know, we kind of, if you look at the S&P 500, for example, we kind of had the fear on tariffs starting to kick in February, all the way to about the back end of Q1. So they will have felt some of that impact in the bookings, and that seems quite clear that they have kind of seen that. The other thing is that it's probably got a little bit more fearful since then into the Q2 period. But the thing is that as a long-term investor, I'm not really bothered what's going to happen in the short term. I would be looking at ASML like in the long term. And in the long term, they've got a great track record of delivering the financials. The financials are still pretty good at the moment. And this blip in the short term probably would be very good to buy a great company for the longer term. And that's what I'd be looking at. Now, what is interesting is on the conference, on the transcript, on the conference call, they talk about the guidance. And obviously, the reason why they give a high guidance is if everything goes really well, and low guidance is if things don't go well. And you can see that if AI is still strong, we see two scenarios where we will be at the upper end of the guidance. The other thing is that if we still see some uncertainty, so clearly they once again they're saying that we have seen the uncertainty here, that we will be at the lower end of the guidance. And the lower end of the guidance could actually be quite significant, because there's a big difference if you look at the guidance range that they just gave for the last quarter. If they're at the higher end, obviously you're getting towards 22% revenue growth. But if they end up at the lower ends, then you're down towards like 10-15% revenue growth, which is obviously significantly slower. But like I said, I wouldn't be looking at the short-term impacts for them. I'd be looking at this and thinking, you're getting one of the best companies on a dip at the moment, and at the moment they're still financially doing good earnings. Look at the shares that they're buying outstanding. I mean, look at this for shares outstanding. They just keep buying back more shares. Look at this. That's absolutely amazing for them. So when I look at ASML from a number point of view, would I buy it? I'd rate it a buy. I don't personally know if I would buy it. I'd put 10, 15, 20% revenue growth in. Profit margins from 25, 28 to 31. 30 times earnings, because I think it's a premium company. It's an absolute amazing company with a very strong moat. And on the upside, I'm getting 30% to, I'll put a little bit of a share buyback in as well, guys. 30% to 44% on the low side. If they do hit the high numbers, 128 to 153% on the upside, which would be somewhere in my target range. So I'd rate it a buy. The only thing that I have with ASML, and this goes to the point of view like what the video is titled, Nvidia, AMD, ASML, which one do I want to buy? For me, the number one in this space at the moment is AMD, because the numbers they're currently doing are very good, and the valuation is cheaper than the likes of ASML, Nvidia, and they're kind of a bit more at the bottom of the cycle. It's easy for them to take market share. Nvidia would be number 3, and ASML would stick in the number 2 position. The question is would I add ASML into the portfolio? And that's a question that I've been asking myself for a lot of today. Now, at the moment, the numbers do kind of show that it is a buy, and maybe I do buy. Once again, I feel like some of these stocks will kind of move in line with each other a fair bit. AMD will move in line with ASML depending on the semiconductor space. But the benefit with ASML compared to someone like an AMD is that the moat is stronger on ASML than an AMD, for example. ASML is probably always going to be needed, whereas AMD, if they don't develop the good enough chips, they're not going to be wanted, and that's where we've seen AMD fall down in the last period of time. But for me, like, the risk to rewards there for AMD, and that's why I like that one the most. ASML, I've got to say, I am tempted to buy it. Like, when you look at the company, it's a strong company, great history of buying back shares. And when we look at the stock, it's not often you get this stock on these kind of dips. You know, this is a fantastic company. It's not often you get it on a 42% dip. It's not often, you know, we had the dip in the 2021 time, and right now the stock is nearly dipping as much as what it did during that 2021 time. And I'd say there was a lot more fear during that time than where we are right now. Apart from that, you know, you kind of do see those kind of cycles in this company. In 2018, 2019, we talked about Nvidia, when that was the last kind of bottom in the cycle there. Even then, like, this stock only went down 21%. If we look at 2015, the most this stock went down was about 14%. 2011, with like the double dip recessions, 21% down there. It's very rare you get ASML on these dips, and that's what gets me very interested, because it's not often you get a company of this quality this cheap. And could it be one to add in the portfolio? Maybe. So overall, when I look at this, like, I already own AMD, and AMD is still my favorite on this list. Nvidia, I think it will do well in the long term. I still have concerns on it. ASML is the one that's in the middle, and the one that I'm kind of thinking on, is this kind of the time to be buying it? And I've got to say, I am having a bit of a think on it. There's a few stocks at the moment that I'm really thinking on. You know, between ASML, Adobe, Nike, Watches Switzerland, and Novo. Those are all 5 companies at the moment that are very tempting in this kind of space, and I feel like one of them will end up coming to the portfolio, maybe even more of them. And this certainly at the moment is one that I look at and think, is it worth building a bit of a position in this one? I am thinking on it, but that's the kind of order that I do kind of put them in anyway. Let me know how you rate them as well in the comment section as well, guys. Apologies for the late video. Thanks for watching. See you in a bit.